These are supply managers in 9 states, stretching from North Dakota and Minnesota in the north to Arkansas and Oklahoma in the south. So we asked these supply managers about, of course, the economy. If they're seeing it good today, everybody else sees it a good economy later on. And it was up for the first time since February, and it's in a very healthy range. So this idea of a double-dip recession, even though we are seeing things a bit slower, we are seeing a lot of uncertainty, it just doesn't show up in our survey. And of course, now on the flip side of that, this is the expanding part of the nation. In other words, the midsection of the country with farming, farm income being very good, food processing, all those factors. So it's looking better for this part of the country. And I think the rest of the nation, we're going to continue to see growth in the months ahead.
What are we looking at in terms of employment numbers?
You know, Cindy, employment was above growth neutral, showing expansion, but there it's just not as good as we'd like to see. We're seeing, on the flip side of that, we're seeing companies being able to grow their output without growing their employment levels, and they're doing that, of course, with higher productivity. They're doing it with increasing the hours worked for their current employees, and that's good. It's just not good for job seekers, and the unemployment levels remain sticky and high. The national rate at 9%, of course. In this part of the country, for most states, and for that matter, every state, all 9 states that we survey are lower than the U.S. average, particularly North Dakota, South Dakota, Nebraska, and Iowa. Those states particularly much lower, doing much better. But you know, Cindy, this year for job seekers, and there'll be college graduates, there'll be high school graduates, and those who are going to return to school in the fall, it's a tough job market. This is one of the toughest summer job markets that we've seen in many, many years. And that's, of course, not good, and it's a real concern for those who are either just out of school or that are out of school to return to school in the fall. This is a tough job market out there.
What about inventories? If we're not seeing an increase in employment, what about inventories?
We're seeing them build inventories. Of course, that's good, and they're building inventories because they expect sales later on, so that's good. And you know, when we look at economic optimism, our business confidence index, it was up for the month, looking very good, despite what we saw in this part of the country with the carnage and the tragedy in Missouri, what we saw in Oklahoma, two of our survey states, and what we're seeing in North Dakota in terms of flooding. All that failed to dampen economic optimism, failed to dampen economic activity. Of course, it's certainly not good for those areas of the region, but again, it did not seem to spill out into the wider economy.
What about imports and exports? How did they fare?
Good exports. I mean, we're seeing this is, I won't say remarkable, that'd be an overstatement, but it's very good in the sense that the cheaper dollar, and the dollar continues to limp along because of the Federal Reserve's cheap money policy of opening the printing presses, that has stimulated exports. On the flip side, higher energy prices has, believe it or not, brought down our import index. So that's good. Good for the trade picture and good for businesses. Businesses that are out there selling internationally are doing very well, and that's going to continue. I mean, if you're a company out there right now and you're depending on the domestic, that'd be the U.S. domestic market, you need to look internationally if at all possible. Look internationally, particularly Asia, particularly the South America, what we sometimes call the BRIC nations, the Brazil, Russia, India, and China. Of course, South Korea as well, Indonesia. The list is long, Europe accepted. The list is long where that's where we need to be looking. Companies have got to be looking there. And what I expect, you know, in this survey, Cindy, our inflation gauge is still way up there. And inflationary pressures at the wholesale level too high, and the Federal Reserve says relax, everything's okay. I think not, Mr. Bernanke. We're going to have rate hikes in the future, and of course I expect those rate hikes on the short end, that would be the funds rate, to begin as early as December of this year. The Fed's just got to head off this inflationary pressures, excessive inflationary pressures. On the long end, that would be long-term interest rates, which is that what's been called QE2, quantitative easing 2. That's set to end in June. So long rates are apt to go up as early as July. So those individuals out there thinking about buying a house, I don't understand it. There's never been, at least if you look at the historical data, a better time to buy a house. If you're intending to stay in that house, you have a job for the next, and you're going to be in there for 3 to 4 to 5 years, never been a better time to buy a house. Housing prices are down significantly, and we have the interest rates at record lows.
You asked about whether they were building?
Right. We asked them about, look back 6 months and tell us, how did your real estate utilization, that would be either new building or leasing, how did that change? And only 18% expanded utilization over the past 6 months, and 3% now reduced it. Now in between, of course, is no change. Then we ask about look ahead 6 months. Tell us about your real estate utilization. Again, that's new construction and building. And there we only saw 13% intending to expand via construction or leasing, and that's not good. In other words, we're just not seeing the companies getting aggressive about their building, about their hiring. In other words, they're trying to expand in their current framework, and that would be employees, that would be building, and not committing to the long term. And of course, that's where we're hurting from. The uncertainty out there, the uncertainty whether it comes from the U.S. Economy, whether it comes from the global economy.
What else about the survey?
Well, I think, Cindy, one important factor is energy prices. And we've got a lot of companies that depend, that are big energy users, for example, food processing, food manufacturing, and their costs are going up and up and up, yet their ability to pass it on is not going up and up and up. So we're getting into cutting some margins there, cutting profit margins, that is. And also these companies are just not hiring to any great extent. They're seeing, well, we've got one input going up in price, that would be energy, and the other input, labor, what do we do about it? Well, you don't increase it, and you certainly don't take on new employees. So that's one of the problem areas. For this part of the country, this is the breadbasket of the nation, whether it be raw commodities, farm commodities, or if it's processed food. This is where the action is. It's been a little tough lately.
So summing up the report for May, it looked pretty good.
It did, Cindy. To sum it up, things are looking good. Just not a lot of new hiring, not much new building. Companies are making do. A number of companies have reported outsourcing. So you wonder how companies in the U.S. can be doing so well if they're not doing any hiring. They are hiring. In a lot of cases, they're hiring outside the U.S. And that's unfortunate for the U.S. economy. Now, it's good for those companies, but we're seeing outsourcing and shipping some of the profits outside the U.S. And again, these companies nationwide, the buildup in cash balances is incredible. And the companies, though, are you going to bring those profits home? Are you going to bring those dollars home? Not likely. Not with these. Not with the corporate tax burden, the tax rates that they're facing. So they're leaving profits over there in Europe and or wherever. And what they're doing, companies are doing, is buying other companies in those foreign nations, and that's what we're seeing. But inflation ahead, yes. Too much, yes. Growth ahead, yes. Not enough hiring, correct. But it's much better than we saw this time last year. I expect things to improve even more in the months ahead, just not the kind of improvement that's going to bring that unemployment rate down.